I think you're going to get a little bit on for the bulls and a little bit for the bears on this one. So if you look at the revenues, you've got, basically in line with consensus on a name that's had a lot of momentum. I think bears are probably going to point to potential slowing of momentum with difficult year-over-year comps on an expensive name. And bulls are going to point to the margin profile, looking at auto margins that are over 26% and being able to kind of prove out the ability to profitably manufacture the 3 and the Y over in Shanghai. Our call is a little bit different. It's on the energy sector. I'd say it would be a far cry to claim victory on these numbers in the quarter. Energy is, off of a very low base. But what we do see here is an ecosystem that is building, and is that if they are able to open up capacity on the 4680 cell, how will they deploy that capacity? It's either going to be in vehicles or it's going to be in energy. And the latest, ad increases that we're seeing on the solar and energy side, that's where we think that they're going to have some success.
Hasn't that been the bull case all along on the battery side? What's changed that's led to your new view? And I wonder if the whole momentum around the stock has changed. I think it's flat so far this year after last year's tremendous run-up.
I think if you go back a couple of years, I think talking about Tesla is more of an energy story, or a utility and an energy provider. That's not a new phenomenon. But I would point out that most of the bullish expectations on Wall Street are in full self-driving, robo-taxis. It's not on the energy side. Energy expectations are relatively low. So we've come out with more bullish. We're double that of the street in 2025 at $8 billion. We do think that that's not being fully recognized and understood in the model. It's going to take some time for that one to manifest, though. And I do think that Elon has some explaining to do in terms of a couple important points, both on the auto as well as the energy on today's call.
Jed, I know you look at the fundamentals. You'll be listening to the call on guidance and all sorts of factors. How much of a problem is it, though, that the stock has plateaued, give or take, since the start of the year, following such a big rise last year, and the fact that some investors might just lose faith because they bought in when it was a gold rush, and now it ceased to be that, or seemingly has ceased to be that for a few months, that they might just lose faith?
Yeah, I mean, listen, stocks never go straight up. And if they do, that's problematic. I don't see that as, at least from a fundamental perspective, you might, if it gives a little bit back, we kind of look at that as a great opportunity. If you buy into the thesis and you start seeing the data points that support that, you're building a mosaic on something bigger and longer term. So I don't necessarily see that as a break. On a frothy market that looks like the entire market is kind of stalling out a little bit. So that doesn't bother us.
Now down 2.5% almost after hours ahead of the call. Jed Dorsheimer, thank you for joining us.
Shepard Smith here. Thanks for watching CNBC on YouTube.